What's going on, guys? We have some news to talk about. So first off, we had the Fed meeting yesterday, and Jerome Powell did mention something about Bitcoin and banks. We're also going to talk about a new Bitcoin miner ETF by Grayscale, and then we'll take a look at Bitcoin. We do have a few patterns playing out. Now, first off, the Fed meeting. We didn't get a rate cut. As expected, we got a pause. This was basically 100% certainty of 99.5. So getting no cut was essentially baked in. And while for the most part, the Fed meeting was a nothing burger, as some say, the Fed did change some specific wording. For one, they took out a statement regarding inflation coming down to their target. That is one difference versus last meeting. They also cited that the labor market is strong. And you'll notice that because some of those statements by the Fed yesterday, we do have some smaller likelihoods of cuts in the future. This was a little bit different before the Fed meeting. We now have an 18% chance of a rate cut in the following meeting, the March meeting, and 82% chance of leaving rates current. This can, of course, change when we get PCE and or when we get PPI, CPI early in February. And these inflation reads coming up will give us a more clear sign of, is the Fed going to cut or not in upcoming meetings. Now, when you go to the May meeting, which is 2 meetings from now, you'll see that the chance for a rate cut does increase a bit. A 37% chance of a 25 basis point cut and about a 5% chance of 50 basis point cut by then. But still, majority thinking that leaving rates current will be what happens. Upcoming inflation data will change the direction of this. Whether good or bad depends on the data. But as we go more towards summer meetings, you see the likelihood of cuts are increasing, with the highest probability showing that by October we will have had 2 cuts. However, obviously this will depend on upcoming data, whether it's inflation data, whether it's job data. If the labor market is extremely strong and inflation is still sticky, the likelihood of cuts diminishes. If the labor market starts weakening a bit, inflation starts coming down a bit, the likelihood for cuts, more than 2 this year, will increase. But anyways, now that we got that out of the way, what did Jerome Powell say about Bitcoin and banks? Well, Powell during the conference said banks are perfectly able to serve crypto customers as long as they can understand and service the risks. He also emphasized that banks operating under the Fed's oversight must ensure their clients' activities remain safe and sound. Now, the market may be reacting positively to what Jerome Powell said, or maybe the fact that we're just past this meeting, past this kind of volatile event. It's giving Bitcoin a little bit of juice. But you know, this statement about the banks and crypto shouldn't really come to a surprise. And about a week ago, we did get this news about SAB121. The SEC rescinds controversial crypto accounting rule, signals a regulatory shift. Now, what is this SAB121? Well, this Staff Accounting Bulletin 121, it required companies to record a liability and a corresponding asset for crypto assets held on behalf of users. It basically puts crypto in a more risky light. Now, critics, including Pierce, the Commissioner Hester Pierce, argued that this guidance added unnecessary complexity, created an uneven playing field for crypto platforms. And under this revised framework, companies can now evaluate obligations to safeguard crypto assets using broader accounting standards. And blockchain associations Kristen Smith says this move alone could mark the beginning of a new chapter for crypto in the US. It really opens up a whole new market. And while Bitcoin and ETH spot ETFs are currently trading on the market, all this yellow tape have kept most US investors and businesses alike on the sidelines. Now, this article goes into a little more light on SAB121, how it affects banks. So Jerome Powell's statement isn't necessarily new news. He might have just shed some more light on it, waking people up to it. But basically, this SAB121 imposed a massive burden on banks trying to get into crypto. Many just avoided it entirely. Now, with the repeal of this SAB121, banks that originally had to put their digital asset business strategies on pause in 2022 due to this operational infeasibility because of how crypto was treated as a liability and having to offset that liability with assets as well, requiring more capital spent, these banks are now in a position to restart these efforts. And according to this article, new crypto-related business efforts are poised to spike at banks, ushering in an era of greater crypto adoption. The banks definitely want in on this. They definitely want in on the transaction fees. They have been missing out. And several Wall Street CEOs have already signaled a desire to expand their digital asset offerings, such as Morgan Stanley, Bank of America, Goldman Sachs, voicing an interest in adapting their business to take advantage of the promise associated with digital assets. Now that I caught my breath, there's a hope that the repeal of SAB121 and the broader crypto executive order will spur innovation both among banks, digital asset natives, as they seek to differentiate their product offerings. Now, I do want to talk about Bitcoin, what it's been doing lately, and then we'll look into this Bitcoin mining ETF. Now, on the 4-hour, you'll see that Bitcoin is in a clear ascending wedge. This is not a bullish pattern. This is a bearish pattern. Typically, you get some tightening up, a consolidation, tightening up at the top, and then a drop. We'll see if this plays out differently. On the daily time frame, I'm still waiting for a break. We are working our way out, but I want to see a candle close out of it. And one thing we are seeing on the 1 hour, we're seeing the RSI petering off, cooling down, while the price continues higher. This is a bearish divergence, and along with this ascending wedge, we might be looking at a little pullback soon. The positive I see right now is Bitcoin is still working to make 100K the new 90K. You'll see that this 90,000 area was a clear level of support. Anytime we dipped near it, it was quickly bought up. Even here, it was briefly under it, quickly bought up. We're starting to see similar at this 100,000 range. You know, in the past, this was a clear resistance. We broke over it for a short period. It became a resistance again. We tried to break over it again, failed, and now we are above it for essentially the longest time we have ever been above 100,000, with a brief dip along the way. It seems like we're trying to normalize 100,000 as a support for Bitcoin, but we do have some things to worry about on the shorter term time horizons. If Bitcoin pulls back to test 100K, I think that's a great opportunity to add before we get later and later into the cycle. Now, some say that Bitcoin won't follow its cycles anymore, and that's perfectly fine. If you believe that, then just hold all your Bitcoin then. But in my opinion, we will follow a cycle. There will be bull and bear markets. Bitcoin won't just go up in a straight line. There will be pullbacks. There will be times of fear. In my opinion, it's a good idea to take some profits as we get later into 2025. And if you believe Bitcoin won't follow a 4-year cycle anymore, it's just going to keep going up and to the right, perhaps it's still a good idea to take some profits on the derivatives, on the microstrategies, on the Bitcoin miners, on the coinbases, because once Bitcoin does pull back, if these stocks get very euphoric, they will drop hard. Now, while Bitcoin was showing some worrying signs on some shorter term time horizons, Bitcoin is still holding over its 50 MA, and this is actually the longest it's been above it since roughly mid-December. And another thing that was pointed out yesterday was that we do have a bearish divergence on the daily. We have Bitcoin topping out basically equal highs while the RSI continues to cool down. You know, one thing about certain patterns, certain chart structures is sometimes technicals don't work out, sometimes they don't play out. We do have some indicators pointing us to the downside. 2025 isn't going to be nothing but up. There will be pullbacks along the way. And if you believe Bitcoin is going to end this year strong, you want to take advantage of it. If this bearish divergence does play out and we start selling off, I do think this is one of the last buying opportunities this cycle, if you're comfortable with buying around $100,000 Bitcoin. But sometimes it's hard to justify buying Bitcoin 4 or 5 times the price you were buying at during the bear market. The potential for more multiples from 100K is way less than multiples from buying at 20, 30, 40, 50K, for instance. The higher you buy, the more risk you take. Now, we do have some Grayscale news. They launched a Bitcoin mining ETF, ticker symbol MNRS. And as said by the global head of ETFs at Grayscale, Grayscale Bitcoin Miners ETF offers investors targeted exposure to Bitcoin miners, the global Bitcoin mining industry, in a passively managed, rules-based, and index-tracked fund designed to evolve with the industry. Bitcoin miners, the backbone of the network, are well positioned for significant growth as Bitcoin adoption and usage increases, making MNRS an appealing option for a diverse range of investors. Now, apparently what they're going to track it with is going to be this INDXX Bitcoin Miners Index. Honestly, I have never seen this before, to my knowledge at least. Let me know if you guys have seen this before below. It does show the different companies and their holdings. You can see that Mara is their largest weight with about a 16% holdings. Next comes Riot, then Core Scientific, CleanSpark, and Iron. You know, if you want general exposure to the space, if you don't want to take the time to look through the Bitcoin miners' balance sheets, look at their earnings, look through the charts and make a decision like that, you can simply buy the Bitcoin mining ETF and take a lot of the thought out of it if you believe Bitcoin miners are going to go up by the end of this year, which I expect as well. Adoption is happening all around us, guys. Nations are adopting it. States are introducing legislation to adopt it and have more favorable crypto policies, adding Bitcoin strategic reserves and so on. Bitcoin has gone a long way from last cycle and the cycle before. In the end, Bitcoin is one of the most valuable assets you can buy. Because it's so rare, it's hard to compare it to any other asset out there. Some people chalk it up to tulip mania, but in my opinion, that's literally a brain dead take for obvious reasons. But thanks as always for watching, guys, and I'll see you next time.